Good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Saturday, May 30th. So this is a review of PNL for the month of May. And as you can see, pretty good numbers that are above here. May PNL right up here, 23%. Year to date, up 93%. So we'll talk a little bit about what went into these numbers for the month. First things first, risk disclaimer, everything that we're going through is for information purposes only, not giving out any advice or recommendations, anything like that. And, I think too, another statement to make is, no guarantee basically of, future performance. I think, these are my results from E-Trade, and you could see this is historical results. Past performance is not an indicator of future results, so we do want to kind of touch upon that and make sure you're aware of that. So this is a video that I've been putting out basically every month where I'm just discussing how we went about this last month. And I think it's important not just to put out the numbers of what you did, but to go through the process of how you got there. Winners, losers, equally important, maybe even the losers a little bit more important about how you got there. And then as well, how you achieve those results. It's an important step in the overall process of trading is the review process. That's also where you can find what you actually did versus what you thought you did. And then, of course, there's the takeaways there is to go through and examine some of those trades and figure out where you made your mistakes and where you could have improved. Even with the winning trades, how you could have made those winners a little bit better. Right? That's what gets you to be a better and better trader is to go through the review process, dissect it, and then go from there. So let's dig into the month of May. As you can, again, very happy with the results. Really kind of took what the market gave us and went with it. And so the winners. When I look at the winners for the month of May, very similar to for the month of April. There wasn't one name that kind of did it for me. It was just the overall process I think that we went through on a day-to-day basis was pretty sound. There were a few names that did very well for me, and I try to stick with those names, ride those winners as much as I could. But I did see that there was a few names that made up a chunk of this month's P&L. ServiceNow, ILMN, which was really nice. VRTX was another one, and Crowdstrike was another strong one as well. So I will go through a little bit of the examples about where we found those trades. I get that question a lot. Hey, how do you go through and how do you find some of these trades? What's the process like? So we'll go through that a little bit. I think there's a little bit of a different process with each one of those names, but these are good. Of course, I had a lot of other winners too, but I think it's good just to minimize here a little bit and talk about which ones you really excelled at. So I'll be covering those in just a second. Losers too, and I think the main thing to kind of go over, just as I did in April, there's no doubt I had some losers for the month, but I kept any of the losers relatively small. Right? That's something that we hear a lot in trading is to let your winners run and cut your losers. We hear that a lot, and it's easier said than done. But I think if I walk you through a little bit of the process, you might get a little bit of a feel for that. Because again, we hear so many things that, hey, this is what you should do, and this is how it's done. But without really kind of going over the process of it, it really to me doesn't hit home until you kind of give some examples. So I try to give as many examples as possible because then it can kind of transform to practice. So one of the things that I like to do that's really helped me as well is defining every trade upon entry. And that's important because you don't want to be doing that, in my opinion, as the trade is going on. I think this happens to a lot of traders where it could be a lot of things. They just either at the spur of the moment decide to get into a trade. Maybe they're following option activity or something like that. They're in the trade and they've got dollar signs in their eyes. and they're not thinking about the overall process, which is, where am I going to get out of this trade? What am I looking at? What am I looking for in this trade? And then also, where is it going to go wrong? Where's my stop price? So again, defining your stop price in the middle of the trade is not the right way. The market will do things that we're not expecting. So scrambling around in the middle of a trade saying, oh, geez, this is not what I expected, and then, selling at the worst possible time. I think if you define all of these things ahead of time, what you're doing is you're taking as much emotion out of the situation. And I think that's where, myself included, a lot of traders stumble upon, is the market will throw a curveball and we're not really ready for it. So the more that you could define things and say, okay, the stock has gone through my stop price, and sometimes everything's going down, right? We experienced that a little bit, very in short term last month, because we just didn't have that many hiccups. But we kind of felt that a little bit, I would say, on Wednesday, I think it was, when some of the growth names were being sold off. All of them were going down at once. So you have to say, you have to get out of your mind, because one of the things that I was thinking about when I got stopped out of one trade was, oh, well, the whole market's going down, so this really shouldn't affect this particular name. Well, if the whole group gets sold off for a couple days, it could be a much more painful experience. So regardless of what the reason is, if you place a stop on something, take the stop, and then move on, let the dust settle, because you could have said that too, over here. And again, one of the main lessons I think to be learned from the beginning of this year and this move down was, if you had your defined stops and you followed them, you may not have gotten hurt all the way in this. If you didn't define your stops, or you did define your stops and didn't follow them, then this could have been very painful for you. So again, it's kind of a two-step process. You have to define them, and you got to follow them. The defining is the easy part. Clicking the mouse is the hard part in the process. And again, this is something very unusual, and traders will have this in their minds for a long time to come, about some of the pain that was inflicted in this move down. But I think really, just as I had talked about, that too many people were comparing this particular situation that we're going through to 2008, 2009, I thought that was a mistake that was made by a lot of traders. And really what the focal point was, what are the lessons that you learned if you traded back in 2008, 2009? Not comparing every move that happens to it, but just taking away the trading behaviors and lessons, rather than every single tick in terms of price action. I think, again, that's the difference between how 2008, 2009 helped me versus what I saw traders doing, for example, on Twitter, comparing every chart to 2008 and 2009 and saying, this is what's going to happen. Every correction, or every major deep correction like we had, is going to be different. There's going to be similarities, but they're not going to be perfect. So anyway, I wanted to mention that. So that's important. And also what I'm doing in terms of defining targets, right? We talked about the stops first because I think that's most important. But one of the things that I hear a lot from traders is, well, I don't hold winners long enough. And I think if you're using whatever it is, I use our own indicator called the market webs, because it really helps me plan out the trade. I've talked about before how the market webs really provide a roadmap, right? And by doing that, and by saying, hey, this is where I think the stock is going to get to, even if it's the last bit of the piece of the trade where you're letting your runner win, you're letting your last piece, letting that runner run, it's important to try to achieve what you set out in the beginning of the trade. So again, a lot of times I will take targets all along the way, but I'll try to get that last piece of the trade to be a big winner. And if it doesn't work, then it's of course having, making sure that you're working with a trailing stop as well, so that you're not giving back that last portion of the trade, right? You never want to let a winning trade become a loser, too. So those are all parts of the process, and getting to having that formula where the winners are larger than the losers. It takes a lot of practice, takes some experience to continue to kind of let trades run without, touching them. We talked about some of the things that I talked about, and I'll go through one of these examples in just a second, but rolling of trades, if you're using options, that can really help you stay in a winner longer. Did I have mistakes? Yes, absolutely. And this is basically, I didn't really change this from last month too much, but I probably did cut a few trades off at, without letting them run all the way. And that's tough to get everything out of a trade. Options versus stock. In April, I talked about that because of the level of the VIX, I just also felt a lot more comfortable trading stock over options. It's a lot easier to kind of control a position that is not moving, doesn't have the added volatility of an option. So I think what we were dealing with back in April for the most of the month was a VIX around 40, I want to say, before I even bring this up. So April, we were dealing with between like a 40 to a 50 VIX for most of the month. I think it dipped into the high 30s at the end of April. But you could see that dynamic changed. And that's important because that volatility goes into the price of options. That's something that you should know. You don't, in my opinion, you don't need to know how to calculate the Black-Scholes model. It does help a little bit to kind of know. It's one of those things that's in the CFA program. But you should know the components of option pricing, and one of them is volatility. The higher the VIX is, the more volatility, the more expensive an option costs. And so with that premium heightened for the last couple months, and now it's still heightened. It's still more than average. I'm still doing a lot more stock trading because you don't have to worry about that. That is not a component when you're trading the equity. Just when you're trading the option. So I will continue to kind of mix them up because I also can stay in a stock position longer. It's just you're dealing with a lot less volatility. So that kind of keeps me in a trade a little bit better. It's also very easy to take stops on a stock versus on an option because a lot of times they don't add up. The price, you could lose maybe 1% in a stock when you get hit with a stop price. In an option, if you're using a chart stop, that could be like a 20 or 30% loss on the option. Because it's just different. They're different instruments. And again, that all depends on what type of option you're using, short-term, long-term, medium, and also how far you're going, if you're in the money, out of the money as well. So there's a lot of variability there depending on how you choose to trade options. Option activity. Sometimes I badmouth option activity a little bit because I want traders to know kind of the truth behind, what we see on the tape. And I think it's glorified that people talk about smart money and so forth. I don't like those terms. But option activity yielded some really nice winners for me last month. And again, my philosophy is for those names is that they're just ideas. When I see option activity on the tape, there's two things. It's an idea for me. Maybe it wasn't a name that I was looking at. We'll talk about that ILMN in just a second because that's a good example of that. And then secondly, it can bring momentum, right? When people see option activity on the tape, everybody starts tweeting about it. People pile into the name. So there can be short-term momentum in a name because of that option activity. Right? A lot of people will identify with that and note it and quote it. So that's some things. I also wanted to mention before we go into the individual trades, what I usually like to mention in the beginning of these videos And you've probably heard me say this before, but now that we're through the month of May, I like to use my sports analogy of Mr. Bill Belichick, who I think is a great coach. The way that he looks at his season, right? If you ever listen to his interviews post-game, Bill Belichick, by the way, is the coach of the Patriots, multiple Super Bowl winner with the Patriots and with my Giants. But if you listen to his interviews, first of all, they're not that colorful. But though there will always be reporters who ask him, hey, what do you think about, do you think you guys are going to make the playoffs? What do you guys think you're going to do in the playoffs? And if it's in the beginning of the season, what he says is, we're going to focus on our opponent this week. We're going to try to beat this particular opponent. And if he strings together a whole bunch of wins at the end of the season, they're going to make it to the playoffs, and hopefully for them to the Super Bowl. But it kind of translates to me in the same way in terms of trading. You have to focus on what's in front of you, and if you string together a lot of profitable months, you're going to have a profitable year, usually, barring any disasters, if you're managing it successfully. So rather than focus on, hey, I want to be up X amount this particular year, focus on what's in front of you and achieving, a profitable day, or maybe that's a little bit too short term because it's very difficult to have every day be profitable, very difficult. And that's not one of my goals. My goal is to have profitable weeks and to have profitable months. And then if you continue to kind of focus that way, then you can have a successful year. So that's the whole goal. And I think also, if you did not have, just as Mr. Belichick, if they lose a game, forget it. It's over with. If you had a bad month or if you made a lot of mistakes in May, wipe the slate clean, because that could be detrimental to you and how you're trading for the month of June. So forget bad month, positive month, great month, horrible month. Forget about it. You're on to June now. And your job right now is to have a strong and a good profitable June for the next month, and forget about all the price action not forget about the price action, but forget about the past performance of the market as well. Don't try to play catch up. Don't get overconfident as well. If you have done well, you really have to kind of stay grounded and handle what the market is going to throw at you going forward. Forget about looking in the rear view mirror. Okay, so let's look at a couple trades and we'll talk about them. But this is one trade which I think kind of checks a lot of boxes for me, because this is a trade that we saw option activity in this one. So this was not a name that was on my radar. This is a biotech name. It's a life sciences biotech company, Illumina. And again, we were at this point in time, we were seeing a lot of biotech healthcare names break out. And this group was kind of a little bit left behind. It wasn't doing that much, but we saw a whole bunch of option activity in here. And how I structured this, I think I was out to October, and we had a bunch of false moves intraday. And what I was doing on these days is I was taking profits on the highs, and then I was basically adding back because I wanted to give this name a chance to break out, and it has. And you could look at this in terms of the weekly chart as well, which I'll wait for Thinkorswim to come up here and provide a weekly chart. But I think what you'll find once this comes up is that the weekly chart is pretty strong. Well, it's not wanting to come up. So let me go back to the daily chart, if possible, which it's not letting me do that either. So, but the main point here is I'll wait for this chart to finish loading. But the main point here is what I was doing with the October options is I was selling into strength. And what I kept on doing is staying with October, and I know that's a far out contract, but what October did for me is it gave me some flexibility. So it allowed me to basically manage the trade and take profits And what I noticed was I really wanted to stay in the trade for as long as the move was going to take place. So I kept on rolling out the contract, and that kind of afforded me to lock in every time I was rolling out the contract. So what that means effectively is if I was in, let's just use round numbers, if I was in a 100 strike or if I was in a 100 strike option and the stock rallied to 105, what I was doing is selling the 100 strike and then rolling out to say 110, and that new contract that I was rolling to is cheaper than the existing one. So basically, I was taking money off the table, but staying in the trade. So that's really important, and that's a great way, I think, to manage options. I think that's how a lot of professional, big institutional traders will do that. You'll see them take off a position, and they'll keep it on by going out to the next month and going out to a higher strike. So that allows them to lock in a lot of the money. So a couple of things there that lined up, and that's how I do a lot of my trades when I'm looking for a technical breakout, and something was the catalyst for the move. Either it was option activity, or it was my own chart studies that I had there. So I'll come back to that one because again, looks like I'm having internet issues because I am home right now. A couple other names that I could just kind of go through because I don't think I'm going to be able to bring up charts here. Let's see if I can fix this really quickly. Let's try. Let me try to reconnect here, and then we'll bring this up again. All right, so we'll go on to the next one. There we go. So here was the weekly chart, but you could see it broke out of not only on that daily chart, but on the weekly chart. Notice it's hitting a little bit of resistance here. So the important thing is, and I'll wrap this one up, is I did get out of this trade. So probably, I don't think there's a major reason for me to get out of this trade. I just went through this rolling process of probably about 3 or 4 times with ILMN, and I was very happy with the profits. But I've probably cut this one off a little bit too soon. So I may revisit this. I talked about ILMN actually in our member video from last weekend, saying how I wanted to get back into it. And besides Friday, it really ran pretty nicely. All right, so next. All right, so that's a good example. Like I said, checks a lot of boxes. ServiceNow. This is one where I day traded a bunch of times into a lot of weakness. So I like to return to names that have had really good earnings. I think buyers return to them, especially in a name that is broken out. Do not be afraid of a name that is broken out. Sometimes newer traders will say, oh, geez, it's up too much. It's too expensive now. I think if something is breaking out, you want to play the breakout as long as it works. I'm not concerned with valuation. I'm concerned with price. So I think this is a great name. It's a name that I will continue to play on dips. That's really how I traded the majority of ServiceNow. It's a name also that we saw a lot of repeat call activity, but it really was a name that I went after. And I think it's important to have those names that you go after on market dips. VRTX is another good example of that. Really strong name, and I keep going back to it. I keep going back to it in market dips. There was one trade in particular last week where I really had to manage it. I caught probably the wrong, I traded this one a couple times this month, by the way. But last week, I caught it. My timing was wrong, and this happened to me. However, position sizing was really important. And I think that's also one of those things that I'm going to talk about too in the look ahead, is that sizing your trades appropriately so that you're not going to run into issues if something like this happens. And if you still like it, you could go ahead and add to the position and actually add a bigger position that could actually get you out. And here was a better entry price considering the price action. And then finally, last one here on the list, which was Crowdstrike. This was a theme that I was playing out, but it just worked over and over and over. I originally had an option trade on this one. I was in October calls. Worked beautifully. I took those October calls off, traded some stock. So kind of went back and forth with this one, but stayed with it. Same process, very strong name. Cyber, very big right now because everybody's working from home and they need more security. So, this is not happening by accident. And if you look at some of the names, there's about 4 of them within this group that are benefiting a lot. We certainly saw what happened with Zscaler on Friday, but this has been happening with a lot of data names. All right. So again, this is not happening by accident. Or it's not a coincidence. There's a reason why a lot of cyber and software names are doing very well right now. So again, sticking with them. So on the flip side, right? We've talked about how option activity, sometimes it could lead to some good trades. NXPI is one of the names that I've actually lost a decent amount of money on, and we've seen repeat option activity in it, and it's just not doing anything. So it's kind of decaying away on my books right now. I don't have a major sell signal in it yet. It's getting there. It might actually trigger a sell signal next week, but it's a good example. Same type of action. Very strong call activity in NXPI. Now they did go out to October, and I'm in October options, so I have time with them. But I'm going to have to manage that appropriately, and if it breaks the stop price, I'm out of it. I don't care just because they position in this, because I think a lot of times what happens to traders who follow option activity is they stay in trades longer than they should because they're like, well, wait a minute, they might know something. There's just a lot of trades that end up being losers. So you really have to, if you're going to look at option activity and follow some of it, what I try to realize is once I put my trade on, I'm not going to, it's now in my court, right? I have to manage it appropriately because they're not going to tell me why they got into that name. So right now, that's one of my biggest losers for the month because it just hasn't done anything. ENPH too was a loser, and I just kind of timed it wrong. It actually looks pretty good to go back into this name, but it's one of those names that just I timed wrong. I took it off and I moved on. All right, so let's talk about and Tesla a couple times just had a lot of fake moves, so that was on the list as well. So looking ahead, and I want to talk just a little bit about some of the finer points here. Continuing to improve, sticking with the winners, being consistent, defining that risk ahead of time. What's really worked for me, and I'll tell you, with achieving this performance, it's not because I'm taking big swings on trades. I've been, sometimes even I get into a third of a position and it works well for me. Or like that VRTX, I started a position completely at the wrong place last week, but I left plenty of room to add to the position to kind of get me out of it. So again, a lot of that is just scaling into the trade rather than, oh geez, I saw optics going all in. Right, that's the wrong approach. So defining that risk ahead of time, knowing how much you want to risk on each trade. This has to be done while the market is closed, and it should be a part of your trading plan. Don't trade just to trade. Don't force trades. Every trade should have a plan. Be careful of that FOMO. When everybody's talking about winners and talking about option activity, be careful if you're chasing trades. That was a big thing. I think this month is that sometimes chasing. Well, normally chasing doesn't work. I don't like to chase. One of the things on also looking at the performance and talking about, the results. I missed some moves. I pared down my risk on Fridays. So a couple Mondays this month, Monday and the one Monday where it was Memorial Day, and of course there was a holiday there. But Monday and Tuesday gapped up, and I did not profit from those days that much. So I did miss some opportunities, but it also just went along with my trading plan. And if you miss some days, so be it. Again, don't be afraid to take stops. Very, very important. That stop in ENPH that I took, actually helped me because I took something off my plate and I was able to focus on the next opportunity. So people forget about that when they take off a trade and they lower their risk. They can concentrate on the next opportunity that's in front of them. And for me, getting out of this ENPH trade, I was able to take advantage of some better opportunities on the tape. This was like, for example, we traded Crowdstrike and MDB. Both went up a hell of a lot more than ENPH did. So again, freeing up your mental capacity to find the next winner. Following price and trend, but realize if the market changes forms. We've talked about that. Less predictions as well. Making predictions, in my opinion, is not needed. This is something that we talked about since the March lows, is that we've never really gotten a sell signal. We got close a couple times, but we've never really gotten a full sell signal. So everybody tries to predict and figure out the next move, but if you could stay with the trend, realize that you're not going to be able to time the top, but react to as the price and trend changes. Carry less positions versus more. That really helps. I think that helped traders on Wednesday when the market went down a little bit. I think you realize if you have less trades on, it's going to be less of a sting if the market corrects a little bit. Trade the overnight move versus intraday scalps. That's important. The majority of the moves happen in the overnight market versus intraday. Avoiding short-term risk. Again, same thing. If we get a little bit of a pullback, it doesn't even have to be a full market correction. You get a little bit of a pullback, and if you've got short-term trades on the wrong way, a lot of times that premium is gone. So be careful of that with option trading. I think newer traders have a tendency to accumulate short-term positions, and that could really hurt when the market goes against them. Trade what is in front of you, very important. So just like I said with the prediction, try to avoid making predictions. However, use your instincts. Be smart with your positioning. And think about if we've run too far in the short term, if we're due for a pullback, if the sentiment is running too high, use some of those instincts. But again, trade what is in front of you, price and trend, ultimately, the biggest things that I look at, biggest factors. All right, guys, thanks for watching the video, and I look forward to June trading with you guys. Good luck, everybody.